Imagine this. You've been receiving your guaranteed income supplement every month without any issues. It shows up in your bank account, right on schedule, and you've built your monthly budget around it. Then one year, you make what seems like a perfectly reasonable financial decision. You take some extra money out of your RRIF, your Registered Retirement Income Fund, maybe to fix your roof, maybe to help a grandchild, maybe just because you needed it. And then, several months later, your GIS drops significantly, or stops altogether. And nobody warned you this would happen. If that sounds familiar, or if you currently have a RRIF and you receive GIS, please stay with me through this entire video, because what I'm going to explain today is one of the most misunderstood connections in all of Canadian retirement benefits. It affects thousands of seniors every year, and the consequences can last for 12 full months. It is not a glitch. It is not an error. It is the rule. And once you understand why it works this way, you'll be in a much better position to protect yourself. Let's start by making sure we're all clear on what we're talking about, because both of these programs, the RRIF and the GIS, need to be understood individually before we can understand how they interact. A RRIF is a Registered Retirement Income Fund. Most people who had an RRSP, a Registered Retirement Savings Plan, during their working years eventually convert it to a RRIF. Usually by the end of the year, they turn 71. The government requires this. Once you have a RRIF, you must withdraw a minimum amount from it each year. That minimum is calculated as a percentage of the total value in your RRIF, and the percentage increases as you get older. The money you withdraw from your RRIF counts as income. It gets reported on your tax return. And that is exactly where the problem begins. The Guaranteed Income Supplement, GIS, is a monthly payment from the Government of Canada. It goes to lower-income OAS recipients. You must already be receiving old age security to qualify for GIS. And here is the critical point. GIS is income tested. That means the amount of GIS you receive is based directly on how much income you had in the previous year. The less income you had, the more GIS you receive. The more income you had, the less GIS you receive. And if your income goes above a certain threshold, your GIS stops entirely. That connection, your previous year's income determining your current GIS, is the heart of everything we're talking about today. Here is how the official process works, according to the Government of Canada and Service Canada. Each year, after you file your income tax return with the Canada Revenue Agency, the CRA, Service Canada uses the income information from that return to recalculate your GIS. This recalculation happens automatically. You don't apply again. Service Canada receives your income data from the CRA and adjusts your GIS based on what you earned in the previous tax year. The GIS benefit year runs from July to June. So your GIS payments from July of one year through to June of the following year are based on your income from the tax year before that. To make it concrete, your GIS payments from July 2025 through June 2026 are based on your 2024 income tax return. The income you reported for 2024 determines what you receive in that period. This is why the timing of a large RRIF withdrawal matters so much. If you take extra money out of your RRIF in a given tax year, even if it's a one-time withdrawal, even if you had a very good reason, That income shows up on your tax return for that year, and it follows you into your GIS calculation for the next benefit year. Now let's look at what income counts when Service Canada calculates your GIS. The figure they use is your net income from line 23,600 of your federal income tax return. This is sometimes called your net income before adjustments. It includes your CPP payments, your OAS payments, any pension income you receive, any employment income if you're still working part-time, and, critically, any RRIF withdrawals you made during the year. When you withdraw money from your RRIF, that amount is added to your total income, and once it's part of your line 23,600 figure, it affects your GIS dollar for dollar, according to the GIS reduction formula. The GIS reduction rate is 50 cents for every dollar of income above the exemption threshold. So for every $2 of extra RRIF income you withdraw, your GIS goes down by approximately $1. This isn't a penalty. It's simply how an income-tested benefit works. But when seniors don't know this, a withdrawal that seemed reasonable in the moment can result in a GIS reduction that lasts for the entire following benefit year, 12 months. Let me give you a clear example so this becomes real. Let's say her name is Dorothy. Dorothy is 74 years old. She lives alone in a small house in New Brunswick. She receives OAS and she receives GIS, and together with a modest CPP, her monthly income is tight but manageable. Her GIS payment has been around $400 a month. In the fall of a given year, Dorothy's furnace breaks down. She doesn't have the savings to cover it easily, so she withdraws $8,000 from her RRIF to pay for the repair and a few other pressing expenses. It's a one-time withdrawal. She doesn't think much of it beyond solving the immediate problem. She files her tax return the following spring. Her income for that year is higher than usual, by $8,000, because of the RRIF withdrawal. Service Canada receives that information from the CRA. And when July arrives, Dorothy's GIS is recalculated based on that higher income. Using the 50 cents on the dollar reduction formula, an extra $8,000 of income reduces her GIS by approximately $4,000 over the course of the year. That's roughly $330 less per month for 12 full months. Dorothy goes from receiving about $400 in GIS each month to receiving closer to $70 for 12 months. She didn't do anything wrong. She needed the money. But she didn't know the connection, and now she's managing on significantly less for an entire year. This is a real situation that plays out for Canadian seniors every year, and it is completely avoidable with the right information. So now, there is a provision that Service Canada offers that many seniors do not know about, and I want to make sure you hear this clearly. If your income drops significantly in the current year compared to the previous year, for example, if you made a large one-time RRIF withdrawal last year, but your income this year is back to normal, you may be able to ask Service Canada to estimate your current year income instead of basing your GIS on the previous year. This is called the current year income option. It does not apply to everyone, and it comes with conditions. But if you've had a major income event in one year that won't repeat, and your income is genuinely lower this year, you can ask Service Canada to recalculate your GIS based on a statement of your current year income. If approved, this can restore some or all of your GIS sooner than waiting for the annual recalculation in July. To explore this, you would need to contact Service Canada directly at 1-800-277-9914. They can tell you whether you qualify and what documentation you would need to provide. This option doesn't erase the effect of a large withdrawal, but it can help cushion it. And it's something every senior with a RRIF and GIS should know exists. Let's talk about some of the most common mistakes and misunderstandings that lead seniors into this situation. The first misunderstanding is thinking that RRIF minimum withdrawals are the only withdrawals that count. Every dollar you take out of your RRIF, whether it's the government-required minimum or an amount above that, counts as income on your tax return. Some seniors believe that only amounts above the minimum are taxable. That is not correct. All RRIF withdrawals are income. The minimum is simply the lowest amount you're required to take out. Anything on top of that adds to your income further. The second misunderstanding is thinking that because a withdrawal was one-time or emergency-based, it won't affect GIS the same way. The CRA and Service Canada do not have a category for emergency withdrawals or one-time withdrawals. Income is income. If it appears on your tax return, it is counted in the GIS calculation. The third misunderstanding, and this is a big one, is not knowing the GIS benefit year timing at all. Many seniors don't realize that their GIS is being calculated based on last year's income. They assume it's based on their current situation. When their GIS drops, they think something went wrong administratively. In fact, the system is working exactly as designed. The drop is a response to income reported months earlier. The fourth misunderstanding is assuming that excess RRIF withdrawals are always a bad idea. That's not what I'm saying here. Sometimes you genuinely need the money. Sometimes a large withdrawal makes sense for your situation. The point is not to avoid RRIF withdrawals entirely. The point is to make them knowing what the downstream effect on your GIS will be, so you can plan for it. Let's talk about what you should actually do if you have a RRIF and you also receive GIS. The first and most important thing is to understand your own numbers. Log into your My Service Canada account at canada.ca to see your current GIS amount and your benefit history. If you haven't set up a My Service Canada account, it's worth doing. You can check your payments, your correspondence, and your personal information all in one place. The second thing is to look at your most recent CRA Notice of Assessment. This document tells you what income was reported for the previous tax year. The number on line 23600, your net income, is the figure that Service Canada uses to calculate your GIS. If that number went up significantly because of a RRIF withdrawal, you can expect your GIS to be lower in the coming benefit year. The third thing is to think carefully, in advance, before making any withdrawal from your RRIF that goes above your minimum required amount. Ask yourself, how will this affect my GIS next year? If you're not sure how to calculate that, Service Canada can walk you through it when you call. You can also speak with a tax professional who works with seniors, not for investment advice, but purely for the tax and benefit impact of a proposed withdrawal. The fourth thing is to make sure your tax return is filed on time every year. GIS is renewed annually based on your tax return. If you don't file, Service Canada cannot recalculate your GIS, and your payments may be interrupted. Filing on time by April 30th for most seniors ensures your GIS continues without any unnecessary gap. There is one more thing I want to cover, and that is the situation of a surviving spouse or common law partner. If your spouse or partner passes away, your combined income changes. You may find yourself with a lower individual income than you had as a couple, which could mean you qualify for more GIs or qualify for GIS for the first time. But you may also find yourself as the sole recipient of a RRIF that was previously in your partner's name, depending on how your finances were structured. In the year a spouse passes away, the income calculations can become complicated. Service Canada does have provisions for spousal situations, and they may be able to use your current year income rather than your previous year's income in certain circumstances of significant income change. If you've recently lost a partner and you're unsure how your benefits are being calculated, calling Service Canada is especially important. They handle these situations regularly and can walk you through it. Let's also briefly address what happens with the GIS allowance and the allowance for the survivor, because some people watching may be in those situations. The GIS allowance is a payment available to the spouse or common law partner of a GIS recipient if that spouse is between the ages of 60 and 64. The allowance for the survivor is for people between 60 and 64 who have lost their spouse or partner. Both of these benefits are also income tested in the same way GIS is. A large RRIF withdrawal would affect these benefits in exactly the same way it affects GIS. The same rules apply, the same annual recalculation applies. If you receive either of these benefits and you have a RRIF, everything we've discussed today applies to you as well. Looking ahead into 2026 and beyond, the structure of how GIS is calculated is not expected to change. It remains an income-tested benefit tied to your previous year's net income as reported to the CRA. RRIF minimum withdrawal rates, the percentages required by the government each year, are set by federal legislation and do occasionally get adjusted, as they were during the pandemic period, when the government temporarily reduced the minimum. But as of 2026, the standard minimum rates are in effect. If there are any changes to those minimums in the future, the Government of Canada will announce them, and we will cover them here. What may change over time is how well understood this connection between RRIF withdrawals and GIS is among Canadian seniors. Programs like this one, and conversations like the one we're having, are part of making sure that more people know about this before it affects them rather than after. Let me bring this all together for you now. The Guaranteed Income Supplement is an important monthly payment for lower-income Canadian seniors. It is based on your income from the previous tax year. RRIF withdrawals, all of them, not just the minimums, count as income on your tax return. If your RRIF withdrawal in a given year is large, your GIS for the following benefit year will be lower, sometimes significantly lower. This effect can last for 12 full months. The reduction is not an error. It is not arbitrary. It is how an income-tested benefit is designed to work. But it is something you can plan for, and in some circumstances, you can apply to have your GIS recalculated based on your current year income if your income has dropped back down. The most important steps you can take are to know your own numbers, check your My Service Canada account, review your CRA Notice of Assessment each year, and contact Service Canada before making a large RRIF withdrawal, not after, so you understand what to expect. You've worked hard for every dollar you have in that RRIF, and you have every right to use it when you need to. This isn't about telling you not to. It's about making sure you're not caught off guard by something that could have been anticipated. I'd like to hear from you before I close. Have you ever experienced a drop in your GIS that you didn't expect? Or are you currently trying to figure out whether a RRIF withdrawal might affect your payments? Leave a comment below. Your question might be exactly what someone else needs to see answered. And if this kind of straightforward, no-nonsense explanation of Canadian senior benefits is helpful to you, please consider subscribing to Retirement Path Canada. We're here every week with clear, honest information about CPP, OAS, GIS, and all of the programs that matter most to Canadian seniors. Thank you for watching, and please share this video with someone you know who has a RRIF and receives GEs. It could make a real difference in their financial life.